The importance of credit scores in achieving financial goals. Do you have financial goals that seem unattainable? Are you struggling to secure loans or credit cards with favorable terms? Your credit score could be the culprit. A good credit score is essential for achieving your financial goals, yet many people overlook its significance. In this blog post, we'll delve into why a strong credit score is important and how it can help you on your path towards financial success. Ready to take control. The importance of credit scores in achieving financial goals. Do you have financial goals that seem unattainable? Are you struggling to secure loans or credit cards with favorable terms? Your credit score could be the culprit. A good credit score is essential for achieving your financial goals, yet many people overlook its significance. In this blog post, we'll delve into why a strong credit score is important and how it can help you on your path towards financial success. Ready to take control. Lenders to help them determine whether or not to lend money or extend credit. A high credit score indicates a low risk of default, while a low credit score indicates a higher risk of default. Lenders use credit scores as one factor in their decision-making process, but they also take into account other factors such as income, employment history, and debt-to-income ratio. Credit scores are also used by landlords to help them decide whether or not to rent to a tenant. A high credit score indicate that the tenant is likely to pay rent on time and take care of the property, while a low credit score indicates that the tenant is more likely to cause damage to the property or not pay rent on time. Insurance companies also use credit scores when determining premiums and coverage amounts. A high credit score may result in lower insurance rates, while a low credit score may result in higher insurance rates. Overall, credit scores are used by many different people and organizations to help make it easier to get approved for loans, apartments, insurance coverage, and more. The importance of credit scores in achieving financial goals. Credit scores are important in achieving financial goals because they help lenders determine whether or not to extend credit. A high credit score indicates to lenders that you're a low-risk borrower, which means you're more likely to get approved for a loan with a lower interest rate. A lower interest rate means you'll save money on your loan payments, which can help you reach your financial goals faster. If you have a low credit score, don't despair. There are still ways to get approved for a loan and improve your credit score. One way is to get a cosigner with good credit to sign on to your loan. Another option is to take out a secured loan, where you use collateral, such as a savings account, to back up the loan. Either way, by taking steps to improve your credit score, you'll be in a better position to achieve your financial goals. What is a credit score and how is it determined? A credit score is a number that represents the creditworthiness of an individual. It is determined by a number of factors, including payment history, credit utilization, and length of credit history. A high credit score indicates a low risk of default and vice versa. A good credit score is important for achieving financial goals, such as securing a loan or obtaining a mortgage. The importance of credit scores in achieving financial goals. Credit scores are important in achieving financial goals for a number of reasons. For one, credit scores are used by lenders to determine whether or not you qualify for a loan and what interest rate you will be charged. A high credit score means you are less likely to default on a loan, which means you will save money on interest payments. In addition, credit scores are used by landlords to decide whether or not to rent to you, and by employers to decide whether or not to offer you a job. A high credit score indicates that you are financially responsible and therefore more likely to be a good tenant or employee. Finally, insurance companies use credit scores to set premiums. A high credit score means you pose less of a risk and therefore will pay lower premiums. In short, credit scores are important in achieving financial goals because they can save you money on interest payments, help you get approved for loans and leases, and lower your insurance premiums. Steps to improve your credit score. 1. Check your credit report for errors. You can get a free copy of your credit report from each of the 3 major credit bureaus every year at annualcreditreport.com. Dispute any errors you find with the credit bureau. 2. Pay your bills on time. Payment history is the most important factor in your credit score. so make sure to pay all of your bills on time, including utility bills, credit card bills, and mortgage or rent payments. 3. Keep your balances low. Another important factor in your credit score is your debt-to-credit ratio, or how much debt you have compared to the total amount of credit available to you. So try to keep your balances below 30% of your total credit limit. 4. Use different types of credit. A mix of different types of loans, mortgage, auto loan, student loan, etc., can help improve your score since it shows that you can handle different types of debt responsibly. 5. Don't open too many new accounts at once. Every time you open a new account, it causes a small hard inquiry on your credit report, which can slightly lower your score. So try to space out new applications for loans or credit cards over time instead of opening several at once. The impact of bad credit on your financial goals. If you're working toward any type of financial goal, whether it's saving for a down payment on a house or trying to pay off debt, having good credit is important. A low credit score can impact your ability to get approved for a loan or qualify for a lower interest rate, which can cost you more money in the long run. Bad credit can also make it harder to rent an apartment or get a job. Landlords and employers often check applicants' credit scores as part of the screening process, so if yours is low, you may be at a disadvantage. There are steps you can take to improve your credit score, but it takes time and effort. If you're trying to achieve financial goals, it's important to be mindful of your credit score, but it takes time and effort. If you're trying to achieve financial goals, it's important to be mindful of your credit and take steps to maintain or improve your score. How to rebuild your credit after bankruptcy. Rebuilding your credit after bankruptcy can be a difficult task, but it is not impossible. With some time and effort, you can improve your credit score and get back on track to achieve your financial goals. There are a few things you can do to help rebuild your credit. 1. Get a secured credit card. A secured credit card is one that is backed by a deposit you make with the issuer. This deposit acts as collateral in case you default on your payments. Secured cards can help you rebuild your credit because they report to the major credit bureaus just like any other credit card. 2. Use a cosigner. If you have someone with good credit who is willing to cosign for you, this can help you get approved for loans and lines of credit that you might not otherwise be able to obtain. Just be sure that you make all of your payments on time, as late payments will reflect negatively on both your credit reports. 3. Get a copy of your credit report. You are entitled to one free copy of your credit report from each of the 3 major credit bureaus every year at annualcreditreport.com. Reviewing your report regularly can help you catch errors or identify fraudulent activity early on so that you can dispute them and clear up your history sooner rather than later. Conclusion: credit scores are an essential factor in achieving financial goals. They can affect your ability to get loans and borrow money, as well as determine the interest rates that you pay for those loans. It is important to keep track of your credit score and work to improve it if needed, in order to maximize your chances of achieving all of your financial goals. By working hard and being mindful of the importance of a good credit score, you can ensure that you have access to the funding necessary for any project or investment opportunity that comes along.